Let's get in. Vineet Bhatnagar, Managing Director of MF Global, joins us right now on the show. Vineet, good to have you. Thanks so much for taking our time out. Vineet, what do you make of, or rather, what do you think, how do you think the expiry would shape up? But I'm asking you about a really short-term view right now because of all that's happened with GAR and the P-note issue. You think there will be some specific volatility pertaining to that in this expiry itself?
Yeah, I think so. Today being the last day, for this month's expiry, the activity will be centered only over the next few hours of trading. And looking at the way the market has behaved over the last 2-3 days in specific, leading up to this morning, there is an indication that the expiration could happen at 5100. However, the analytical analysis that we do based on the data does still point toward an optimum expiration price or strike price of 5200 for Nifty today.
5200 for Nifty. Vineet, what's the medium-term sense, however, over the next 2 or 3 days, or maybe over the next new series as well? How do you expect the benchmark to shape up, and specifically some of the large caps, particularly banking, because that has been the weak spot the last 3 or 4 days, and a lot of people believing that there will be further retracement?
I think the current volatility or the current decline that we have seen is clearly based on the immense amount of concern that the FIIs as a client group have about GAR and the guidelines under GAR and the possible impact that it could have on their trading positions, on their P-note book. So till such time that they do not take a complete assessment of what the GAR framework actually implies, and if there are any other clarifications or dilution that were to come about from New Delhi are not taken into account, there will be that underlying weakness that would persist as a sentiment. So going into a new expiration, I think it is important over the next few days for us to see whether there is clarity or not. Technically, the market having broken a 200-day moving average, which at this point in time stands around 5150, is obviously pointing towards continued weakness. All the large cap frontline stocks are also hovering around their 200-day moving average. A lot of them have been battered down, but then continued weakness is something that can go on for more days. There is another parallel analysis that we do, which is a capitalization index, which points towards a bottoming formation that comes about, in a 4-week, 3-week kind of a trading pattern. That particular indicator is pointing towards a situation where an oversold situation may come about. So it's quite possible that the market may look weak for a day or so, but the bottom may come in at 5050 or at worst 5000, and from there can be a nice bounce back.
Vineet, hi, morning. What is it that you're picking up by way of rollover trends for the IT space? Because 2 weeks from now, we're going to have, the Q4 numbers actually starting to trickle in, and IT is going to be the first of the lot.
Yes, absolutely. Rollovers across the board have been below average. For the Nifty stocks itself, it is rolled over as of this morning only to the extent of 52%, as against an average of about 63%. For single stock futures as a pack, the rollover is about 58% against, again, an average of about 63%. As far as an impact on account of the expiration today and the last half an hour activity that comes about due to VWAP, points towards weakness in stocks like Wipro and Infosys.
Okay, so watch out for the IT pack. The other rate sensitives, Vineet, and how do you see them? Because, we don't speak these days too much about the two-wheeler stocks in particular. I mean, they've fallen off the radar by virtue of what they're doing fundamentally, as well as the volatile action that they used to have and now not having them. What's your sense really on what two-wheelers or maybe a couple of stocks like Tata Motors could do?
Tata Motors, Bajaj Auto, Mahindra & Mahindra, Maruti have really been some of the stocks that we have stepped aside from as far as trading situation is concerned. I think there was some position that one could have taken on the long side for Hero MotoCorp, but that also was a bit of a contrarian kind of a view if you look at the sectoral outlook in the next week or 10 days as a whole. So overall, it is fair to say that there are no trading strategies that we are prescribing to as far as the autos are concerned right now.
So Vineet, what is your sense? It is going to be banks on the way down and banks again on the way up as well after that bottom of 50-50 that you're watching out for?
Yes, I think that should be the way it should point out or it should work out. But in addition to the banks, which have really been at the receiving end over the last 5 trading sessions, there are other frontliners also who should start showing a rebounds clearly, and that would of course include names like heavyweights like Bharati, could also mean some amount of recovery in Reliance. And of course, as you rightly said, names like SBI, ICICI should also result in that bottom formation that we are hoping to see at 5,000 to 5050 level.
Vineet, there is a lot of activity seen in this series in particular. While it's been a bad one, a lot of activity has been seen in stocks in mid caps like Bombay Dyeing. There is a VIP. Titan has had some frenzied activity the last couple of sessions as well. Anything that has caught your eye in particular?
No, I have. To be honest, I have not looked at these names. But if I were to just give an overall outlook on how they are expected to perform, it's not surprising. I mean, we all understand the way the markets behave in terms of psychological setup. We saw that in the first week of January, or from the 10th of January, there was a tremendous strength that came in the frontliners. It was supported and followed through in February. Clearly, it was on the back of new money that came in, but a lot of it was getting into the long side of the portfolios for frontliners. And the second wave from mid-February, I think the beneficiaries obviously were the mid caps. When the tide turns, as what we have seen from first week of March, first the frontliners will be dumped. Clearly, the positions that people unwind first are the single stock futures or the short-term trading positions, and then come quickly the mid caps. So what you are describing to me is symptomatic of what the markets what the markets would have done in terms of how it has panned out this month.
Okay, Vineet, just a question on how do you believe the FI ARC positions or hedge positions should shape up post this expiry or closer to 3:30 today as well? Is there a sense that a lot of hedge positions which will not be rolled over, and therefore there could be some cash market selling as well that could come about for all those positions which are not rolled over?
It's a very good question because I think there are two forces that are going to come about. One is of course the arbitrage, which is the cash futures book that you pointed towards, and the second is the hedge book that comes about because of a long P-note book. So you clearly understand that when the P-notes are issued, there is obviously a contra book that needs to be in place by the P-note issuer, because there is a need to keep the downside protected. Now it is the interplay between these two books as we look at the trading evolve over the next few hours, which will decide which side of the book is actually getting rolled over or rolled over at all or not. And there is this, shall I call it, a tussle or a tug of war that will happen, which will point towards whether the rows are, as they were in the morning, below average. The rows are going to be on the short side, and quite concomitantly whether there is going to be a cash market selling, because the P-note book may result in even the underlying cash book to come for a sale.
What are your clients doing, Vineet? What are they likely to do? I mean, from the conversations that you've had, you think that there would be no rollovers, or rollovers would remain low, and thus cash market selling coming into play in the second half?
I think so, because the way we are, of course, there is a lot of, shall I say, confusion and concern in the minds of the clients that we have been speaking with over the last day or so. But looking at not only what we may have captured from the discussions, oral discussions, but the way the setup is looking right now, the VWAP related pressure is only going to be on the downside. The rows are looking low. So, what you said is a clear possibility.
Vineet Bhatnagar, so good to have you on the show. Appreciate you taking the time out and joining in.